Welcome to Java. Thank you kindly for joining me. It's February 7th, 2025, and it is also Friday going into the weekend. We've got a very busy day ahead of us and a lot of things going on, not to mention that it is Friday and a large mover prior to this weekend. Now, could be a few things flagging happening this Friday. We've got a few indicators looking at some different aspects of this. So, with this, prior to the market open, it's all about jobs and employment. So, as always, let's get started with our favorite risk indicator is the MMRI, Manorino Market Risk Indicator. It's at 297, so still below the 300. It's still in high territory. Now, this is not much of a change from yesterday. However, there was some significant movements in the bond markets overnight. The relative strength of the dollar has pulled back a little bit. So the numbers right now not showing much of a change from yesterday, but there's a definite shift. And I'll talk about that in a little bit. So the fear greed meter is in fear territory, sitting at 41. So showing there's still quite a few retailers in the markets right now, still risk on really, driven by fear still. Now it's all about jobs and employment this morning. We're going to hear prior to market open again. So bad news is good news for the market again. So if it comes out that there are less jobs, that would mean that there's Fed cuts coming. The market will believe in easy money, which is what it runs on. Easy, cheap money, so stocks will go up. However, on the opposite side, if the job numbers are high and there's low unemployment, that kind of foretells no cuts from the Federal Reserve, and the market could most likely would go down in probabilities. Nothing for sure, not financial advice. That's just typically what happens. So, a couple of things within this. The 10-year yield. Now, the interesting part, if you look at it, is 4.435 at the moment, but it spiked a bit before having some kind of miraculous pressure to push it back down under that spiking rates. As always, very likely the Federal Reserve, Asian markets were open. The yen has increased in value in relation to other currencies now. What does this mean? They've allowed their rates to float up a little bit, and that is kind of bolstering their currency, the relative strength, a little bit. So, with that, the pullback in the dollar, that has kind of normally would leave more room in the markets than what we're seeing. So the Dow is still down, pretty relatively flat, really, but futures not looking so good. Everything could shift on these job numbers when they come out, but gold is still in rally mode. And I've got more about gold in a moment. Silver going along with it, 32.75 right now. So these two hitting highs and oil recovering as well. So all of this happening together is creating the Japanese yen hitting its 8-week high on the bond yields, as I was just speaking about, and the sterling for England is dropping after the Bank of England rate cut. Well, they just eased that, hits their currency, so their currency significantly weaker. Now, going into these stocks, I do want to make a little bit of a note here. It's not just Amazon, but all of the larger tech companies planning to pour massive amounts in the numbers, hundreds of billion for Amazon into artificial intelligence in 2025. So they are the large spender of Microsoft and Alphabet, which is parent of Google company, but they are all pouring money in together, saying that the cost of interference will meaningfully come down amid DeepSeek worries. Now, this is because DeepSeek came out of China, their artificial intelligence, significantly less expensive than what they're putting out to the American public. So, kind of a reminder there for them that there's such thing as competition still, even with their monopolies. Okay, so with our calendar this morning, prior to market open, 8:30, employment report, unemployment rate, hourly wages over the year, and then we've got some government presidents speaking. and pardon me, Fed governors speaking. They're going to manage markets if necessary, as always, and then getting consumer credit. Now, a word about this. We understand fully these numbers are cooked, not going to come out as they are. However, how they come out is going to dictate how the market reacts initially. So keep that as the back thought to all of what's going on in this market. Now, with this, we've got Fitch ratings. Further escalation United States China trade curbs seen in their base case. Now, we know Fitch ratings also are under purchasing power, meaning that they can be influenced. They are not a totally independent company, but they're keeping this under significant watch, the relations and the tariffs again. So all of this together is pushing up the prices of gold. Now, with this, we've also got the Bank of England. Again, they're out of gold bullion. They've got gold bar withdrawal delays, 1 to 2 months of wait. So if you've got your bullion, or at least you thought you did, had your bullion in with them, you're going to have to wait quite a bit. Gold prices at an all-time high, and they are empty. So, calendar, want to mention this Sunday is going to be a major, major distraction in the United States. It is the Super Bowl. So, military and police in the French Quarter, this is in New Orleans. Super Bowl security in full force due to a couple of incidents that have happened recently. So, if you're going urging caution, again, large crowds, just stay aware. Uh, I want to talk about this for a minute. We were talking about bonds. They began to spike and then miraculously came down. Now, the Fed's balance sheet runoff nearing pivotal moment. Federal Reserve's overnight reverse repurchase agreement program is nearing zero. The pressure could mount on the central bank to slow or stop asset runoff as it quote unquote fights inflation. We all know they want them to continue to inflate. So as this comes out and they're starting this wind down of this repurchase agreement program, this could hit markets significantly. So as we watch this battle going on between the Federal Reserve and the new administration, this could be sort of a political tool in their box, if you will. So we've got Germany putting on a debt brake reform. This could rattle global bond markets. The reason they're saying this is that debt must continue. They must borrow in order to continue with the liquidity, or this could create that lockup shake we've been speaking about. What does this all equal in the long run? We know they are heading toward a CBDC, despite what they say. Now, Waller came out saying that they've dropped the wholesale CBDC concept. That alone, usually what they say is complete opposite of what they're doing. So they're saying the Federal Reserve is no longer exploring the idea of creating a new liability for interbank settlements, instead looking for ways to improve the existing systems. But they've already got Fed now in the systems. So what this equates to is that they've got this almost ready to roll out. They are just not going to call it CBDC. We spoke about this earlier, that CBDC is now on the radar. They understand this of regular people. So if you call it this, it's going to be rejected. Now they're saying that they're going to reject it first and just go on with their plan and call it something else, something that will sound nicer, more palatable to the public to accept, if you will. So with all of this going on and the overnight issue that happened in that debt market, caution into the weekends, particularly into trading the end of today. It's going to affect markets. I do not like what I'm seeing. It is not good. So the numbers prior to market open on unemployment, Zero Hedge came out with this, the alternative data, indicating healthy pace of job creation in January. And this is adjusted to the government jobs that they are talking about. Now, this is a layoff tracker. So, judge temporarily blocking the Trump plan offering incentives for federal workers to resign. So, this is set to time out that they would resign but continue to be paid until September of the year. Now, this being temporarily blocked, we'll see exactly what this means. Does that mean that they can still be laid off, or it's just delayed? So, VA is the newest sector that is being kind of cleared through, if you will, by the Doge. They will end remote work status for thousands of staffers this month. So, regardless of the job situation, they are going to be mandated to be back in office for work. So I suspect that would clear out a number of those workers as well. So, what happens when so many people lose their jobs or cut back or are worried about them? Well, the next is housing. We've got homeowners, particularly first time buyers, worryingly late on their mortgage payments. Now, if there are a lot of defaulting mortgages, that's pressure on the housing market, also pressure on the perceived wealth effect. There will be lower spending, and this could send the negative spiral into effect. So, speaking of, aside from the deflation spiral, we've got the pressure on the other side, which is inflation. Egg prices spiking, caused, as they're saying, due to massive culling of chickens, poultry, other game birds because of the avian flu that is spiking. So, this is prompting surcharges on ordering of egg products. It is also prompting theft. There was over 100,000 eggs stolen from a Pennsylvania distribution center. They're estimating this was something in the realm of $40,000 of theft. So that's never in my lifetime did I think I would see such thing. At any rate, back to the Fed. Waller backing regulated stablecoins to boost the United States dollar's global dominance. I want to bring this contrast out. Now, as I said, they won't say CBDC. Stablecoin. Stablecoin boosting the US dollar. Now, what are the states versus the Fed doing? Let's go over here. Bitcoin, Kentucky, joining the list, trying to introduce Bitcoin Reserve. Missouri, building in Bitcoin Reserve. Utah, also potentially enacting Bitcoin Reserve. Bitcoin Treasury adoption growing in Latin America, mirroring the United States Strategic Bitcoin Reserve Plan. So, going into real assets versus going into manipulated assets that the Fed would rather you be transacting in because they can control it. Speaking of control, the UK is ordering Apple to create a backdoor for them to access users' encrypted accounts. If you're not aware of this and you are one of our friends in the UK, please look into this, or at least be aware that this is going on. I know many of you are aware of all of this garbage in the back door, if you will. So I wanted to bring up Ondo. Ondo Finance unveiling Layer 1 blockchain for institutions to tokenize RWA real-world asset. So Ondo Finance bringing stocks and bonds is what it's designed for. On-chain with the new platform. So if they come out, stocks and bonds being traded on the new platform, blockchain could be an excuse to have an issue occur, if you know what I mean. So be on the lookout for some flags. It is Friday, going into a weekend. Massive, not disruption, but distraction with the Super Bowl going on. I do hope everybody enjoys the Super Bowl if you're into that, or that you have a wonderful weekend. Just keep all of this in mind in the back of it. So with this, I wish you all a wonderful weekend until I see you again on Monday. And until I see you then, of course, stay free.